Hi, I am Nimesh Prakash, the Insurance's Chanakya. This video will cover the basics of insurance products with details of coverages, extensions and exclusions. Every week, I will upload a new video on different covers available in the market. These videos are for insurance students, professionals working as agents, insurers, brokers and anyone with interest to know about a particular insurance product. You can suggest what other products that you would like me to cover in next videos. If you like the content, do like and subscribe. Also, you can press the bell icon to get the latest uploads and notifications. Say, I am one of the directors of a big pharmaceutical company and one of the shareholders has filed a complaint against me for taking a decision on a particular expansion project that may erode share value of the company. They have alleged that this expansion will incur huge capital and resource of the company, thus reducing the profitability and thus the share value. Although I have not taken this decision alone, it has been discussed and collectively accepted by the board, but I have signed and finalized the deal in my capacity as director of the company. This will trigger the D&O policy. Why is D&O liability insurance important? The director and officers of a company hold positions where they have to make several decisions on behalf of the company, like fund usage for a project, employee hiring and firing, project approval, vendor approval, etc. They have responsibility towards their company, the shareholders, the employees and to all the public at large. They may become liable to pay damages for their wrongful acts such as failure of supervision, wrongful termination of any employee, fund mismanagement, etc. Along with common law responsibilities, they are also liable for duties of director under the Companies Act and duties stated in Articles of Association. Directors and officers would have to ensure greater personal accountability, deemed knowledge of regulations, corporate governance adherence, duty of care and due diligence, stricter monitoring and supervision. If these checks are not put into practice, there are increased chances of personal litigations against directors and officers. What can D&O be held liable for? Actual or alleged misuse of corporate funds, Companies Act or other Government Acts violations, for example, Clause 49 of Listing Agreement, false statement to government agencies, irregularities in securities issues like insider trading, etc. Breach of duty to minority shareholder, imprudent expansion leading to erosion of shareholders' wealth. What is D&O insurance? D&O insurance is designed to protect the personal fortune of directors and officers of a company against the consequences of their personal liability for financial losses arising out of wrongful acts in their capacity as directors and officers. What are considered as unlawful acts? A wrongful act could involve actual or alleged errors and omission, misstatement, misleading statement, neglect, breach of duty and trust, breach of warranty of authority or other acts committed solely by virtue of their respective capacity as directors, officers, employee of the insured company or matter claim against them because of their status. Who can be insured under D&O? All directors of the insured organization, including non-executive and shadow directors, all authorized officers of the insured in the organization, including managers and company secretaries, past directors, officers, new positions created after policy inception, outside directorship. The policy will apply to the holding board and all subsidiary boards plus position on external boards which are held by any insured persons purely at the request of insured organization. Who are potential claimants and respective type of their claims? By shareholders, they can trigger direct and class action suits alleging financial loss attributable to a failure by director or officers responsible. The employee's labor-related issues like alleging unfair dismissal, discrimination, wrongful promotion, sexual harassment, breach of employment contract, security concerns by creditors, a company going into liquidation and failing to pay creditors, by competitors alleging that their business has been adversely affected by the restrictive trade practices, for example, price fixing, by customers alleging that they have suffered financial loss following the wrongful advice on the application or suitability of the product, by regulatory bodies for offences under Companies Act or breach in legal and government statute. Who should take the policy? Public listed companies, private unlisted companies, startups, housing societies, any company having director and officers that make decisions that will impact shareholders. What a claim shall mean: any writ or summons issued against any director or officer for a wrongful act, or any written communication alleging a wrongful act communicated to any director or officer. Who are the insureds under the policy? Side A cover has directors and officers of the company. Side B has the company itself under company reimbursement provisions. What are the exclusions within the policy? Where legal action or litigation is brought within the excluded territories mentioned in the policy, to the extent that claim payment is available from any other source other than the policy. For bodily injury, sickness, disease or death of any person, or any damage or destruction of any tangible property which is covered in the public liability policy. Seepage, pollution or contamination of any kind, dishonest, fraud or malicious conduct of the directors and officers, by director and officer gaining any profit or advantage on receiving any remuneration to which he or she was not legally entitled, made by any third party based upon breach of any professional duty owed to such third party, which is covered in professional indemnity policy. Circumstances existing prior to or at the inception date of this policy and about which the directors or officers of the company knew or have known to give rise to any claim. Taxes or fines or penalties or punitive or exemplary or multiple damages or any other claim deemed uninsurable under law. Failure or omission on the part of any director or officer to effect and to maintain insurance for or on behalf of the company. Liable, slander, infringement of copyright, infringement of patent, separate insurances can be availed for this. It may be resulting from goods or products manufactured or sold or supplied by the company covered, which is already covered in products liability insurance. Claims brought about by individual or entity that owns more than a specified percentage of share capital. This exclusion is known as major shareholder exclusion. Coverages: investigation, investigation costs, public litigation expenses, defense cost, company securities, non-executive directors, extradition cost, outside directorship, bodily injury and property damage, defense cost, assets and liberty, proceedings and expenses, automatic cover for new subsidiary, discovery period extension for 365 days on 100% of the full annual premium in effect at the expiry date of the policy period, limited runoff for retired insurance persons, civil fines and penalties, emergency cost, regulatory crisis response cost, entity protection for critical occurrence or crisis communication cover. Carve back form exclusions. US claims bought by the insured in insured versus insured exclusions, whistleblower claim as carve back, pollution exclusions with carve back for defense cost and shareholder derivative claims, employment practices violation, discovery period for retired directors, bodily injury and or property damage, provided however that any claim for emotional distress shall not be excluded with respect to an employment practices violation. insured versus insureds cover, kidnap ransom cover, pollution defense cost extension, joint venture liability, infringement of IPR, libel and slander, tax liability extension, US FCPA and UK bribe extension. What are the deductibles there? The policy is subject to deductible. No deductible is applied for side A cover, and deductible is applied only for company reimbursements cover. How is a D&O policy rated? There are different points: turnover and gross assets, financial positions of the company, the geographical operation of the company and jurisdiction, the trade activity and organization structure, the number of directors and officers seeking the cover, whether the company is listed or unlisted, if listed where, and past claim experience.